So the world stock markets continue in a downdrift as I have been predicting for quite some time. Now the question is how much more? You already see most global stock markets being negative for the year 2015 already. Well, if you look at many commentators, uh, experts, everybody seems to be, pointing out that there is a cross play across many asset classes, and this is something which is more technical in nature than fundamental. That there is nothing wrong with the economy, but the problem is there is something wrong with the world economy, and stock markets are only a barometer of economic activity in that particular country, in the world, and is reflecting all of it. So as long as you find these experts and commentators being complacent, you will see that the stock markets continue to fall. You'll see more red. Now it is quite likely that after such steep falls there may be some small corrections that take place on the way, but that is really not going to take away the importance of the fact that we really are in a down market. There have been some very interesting developments of late. This is the second time that a major hedge fund in the last month has closed the tap for redemptions. Whenever you close the tab for redemptions, it shows signs of distress. There is already signs of great distress in the distressed debt market, and this only furthers the view that there is further trouble ahead. There may be many more hedge funds. Hedge funds have not done well in 2015, and there may be many more hedge funds which may be following the similar direction. So please be careful. These are all signs of further trouble coming up in world financial markets. Looking at the price of oil, there is a great tussle within the OPEC about whether the production should be cut. It is oil prices have fallen quite substantially, benefits countries like India, which should do extremely well because they are really in that sweet spot to take advantage of low oil prices. Yet, it really also depends on further reforms and further infrastructure development agendas which countries like India need to adopt to be able to take advantage of these low oil prices, rather, while oil continues to remain low. Do not forget the fact that no asset class remains in that territory for that long. Someday it is bound to rebound. When it will rebound, please stay tuned. I will definitely update you on my predictions on oil as well in the next couple of sessions. The stock market downfall, as I said, could continue. It's very likely that there could be small upward corrections, but they won't last very long. This is how I believe the stock markets are headed from here. A very interesting week in which you had U.S. presidential candidate Donald Trump talking about banning immigration of Muslims into the United States for some time, and the outrage this had in many parts of the world. Uh, Also, Mr. Trump talked about many parts of London being so radicalized that the police would find it extremely difficult to even enter those parts. Um, Now, whereas Mr. Trump is trying to focus on some religion and he's made some politically incorrect statements. What he That's what he describes them. But there is indeed a growing threat of terrorism in this world, and this also would have a tremendous impact on global financial markets. Because if you see some more incidents happening, and definitely it's going to come and rattle markets which are already very fragile. So definitely the politicians need to take some extreme steps. There have been some very serious happenings in this year, last couple of months in Paris and then in California. And should this repeat itself, I think this will definitely send shivers down the spine and could rattle world financial markets further. This is one of the negative factors I see going forward, and it is apt for politicians to get together and definitely formulate strategies to tackle this rather difficult situation. But anyway, it was also interesting to see with rather extreme reactions in the UK proposing to ban Mr. Trump from entering London, and definitely something which he has made a lot of investments in Scotland and is very unhappy about. But leaving all this aside, I think the issue of terrorism needs to be tackled with greater vigor than ever before. And sympathies to a lot of people who died in the Paris and California attacks. And I hope the politicians really take cognizance and really try to take some steps. These world financial markets, you can yourself see, are extremely fragile. Finally, coming to the US Fed meeting that's about to come, most people expect Janet Yellen to raise interest rates for the first time in 6 years. And then a lot of commentators think she should be moving like an injured snail. That means the rate of interest rates hike should reduce dramatically thereafter. Then why hike interest rates at all? Who is she trying to signify? If you feel that you are an injured snail, then don't move interest rates at all. And maybe I'm the only person in the world, but I personally believe she will not hike interest rates in the forthcoming week, for the simple reason that that she's encountering an era of deflation, not inflation. You do not hike interest rates in an era when commodity prices are falling so sharply, when there's deflation in the world around you. You hike interest rates when you see inflation, not deflation. And you need to filter out the noise to be able to see these signs. You can see some more further interesting Chinese data coming over the weekend, like the retail uh, index, the purchasing managers index, which could throw further light on how the second largest economy in the world is behaving. Irrespective of what is happening, I still believe there is a chance that Fed may not hike. If that happens, it could rattle world financial markets again. If they do hike and then they decide to move at snail's pace, or at an injured snail's pace, that also signifies that they are very afraid of growth. Either way, they are signifying to the world financial markets that there is a great imbalance, that the growth is sharply retarded, and what it means for the world of business and finance is that there are many more red flags than green flags. And I'm sure that world financial markets look up to the Fed, and this significance coming from the US Fed in its Fed meeting will not be taken down very favorably by world financial markets. So you could see some more tumble as a consequence of this. So definitely more red I see going forward. There could be sharp corrections on the upside as some of the markets appear quite oversold, but that does not take away the fact that we are going to see more red going forward. The markets are in a negative zone, and I personally believe that they have not yet absorbed most of the negative news. People are very complacent as yet, and there is more downside than upside in world financial markets left. So stay out, stay calm, and it's what promises to be a very negative week, a difficult week for world financial markets. So look forward to talking with you soon again. Take care. Happy investing. Bye bye.